All right, what's going on, guys? Tremaine here. Today we're going to talk about bias and narrative. Okay, so I'm always asked, how do you get bias? Can you help me with bias? What is the difference between bias and narrative? Can you explain bias? How do you get your bias? So we're going to cover a little bit of that today. Bias and narrative. What is bias and what is narrative, and how do you use the two to frame setups on the lower time frame? So bias is where. Okay, bias is directional. So where is price going? Is it going higher? Is it going lower? Is it going up to buy side, or is it going down for sell side? Narrative, on the other hand, is why is price going to those levels. All right, so bias is where is it going? Narrative is why is it going there? Okay, so your bias is bullish, you're expecting it to go up. Narrative is, okay, we've taken out sell side, traded down into an order block, traded down into new day opening gap, traded up, breakaway gap, market structure shift. All of that is narrative. So we have a daily chart pulled up here, and we're going to talk a little bit more about this as we go. All right, this is Friday's trading. We're opening up a new week here with Monday. It's currently 5 in the morning. I haven't slept. I'm feeling good, ready to go. Anyway, here is narrative. Daily chart here. If you're bearish, okay, and we have a large down closed candle, energetic candle like this, ideally you want to see price respect the lower half. Okay, if you're expecting sell side to be tagged, which we are, okay, you can look up here on Twitter. I shared that I'm expecting lower prices. So if we're looking for sell side, relative equal lows, and we want NASDAQ to stay heavy, okay, the narrative is we don't want to see price spend a lot of time in the upper half of this down closed candle, this large range candle. Okay, we want it to stay heavy, work in the lower half, and then take us down into the sell side. So our narrative is we want to go lower because we don't want to see price trading in the upper half. Our bias is where is it going? Sell side, okay, preferably. All right, not saying it's going down there, but that is the bias I'm going with into next week. So with this logic that we don't want to see the upper half traded to, okay, or at least not spend a lot of time there, let's drop down to an hourly chart. All right, and all of this is in the weekly forecast I shared on Twitter. This fair value gap up here, all right, I shared that I don't want to see this traded to. Preferably, I want to see this fair value gap stay open. Why do I say that? Because the narrative that we got from the daily chart is we don't want to see the upper half of that entire down close candle on the daily chart be traded to. So visually, this is the high of that daily candle, and midpoint comes in about right there. So let's zoom out. Come on, NASDAQ, work with me now. There we go. All right, so this is the upper half of this entire down close candle. Don't want to see that traded to, preferably. Let's go down to an hourly chart. Now that we have that narrative in play, do I want to see this traded to? No. But we have this fair value gap here. Why is it permissible for price to trade in this inefficiency, but not this one? Because this fair value gap is in the lower half of that daily down close candle, and we're allowing price to work in the lower half. Okay, if you're bearish, the lower half of premium arrays should send price lower. So that's why this inefficiency, I'm allowing price to work in that. Let's take it a little step further. 15-minute chart. All right. I highlighted this specific fair value gap here on the 15-minute chart. I said I'm watching this inefficiency. Okay, you could click the link in the description for that specific tweet. But I'm watching this fair value gap. Why am I watching this inefficiency? Well, I'm not worried about this small one up here. I'm not worried about this one. I don't care about any order blocks up here because all of this is in the upper half of that daily down close candle. Okay, remember, our bias is lower. I want to see sell side. I want to see that daily sell side, which is near here. Okay, bias lower, narrative. Why should it go lower? I don't want to see this traded to. I want to see us stay heavy. So 15-minute fair value gap here. All right, let's make that a little darker. That's better. So looking all in this price leg here, where can we reasonably expect a possible retracement higher to go lower? Well, we have inefficiency up here, looking left, small little gap up here. But this right here is an obvious imbalance, okay? But what do we have right here in this small piece of price action? This is a balanced price range. So do I want to see price trade above this SIBI and trade in this one and this one, trade, take out the buy side? Do I want to see that? No. We have a clear inefficiency in the lower half of that daily, okay, range, that daily candle. And right above this inefficiency is a balanced price range. There's no need for price to come up here, okay? We open on this candle, trade down, come off, open on this candle, trade up, trade down, close here, open on this candle, trade up, trade down, and then we leave that pocket of inefficiency. So there's no reason for price to trade above this fair value gap, which is why that's the one I'm watching. And it's in the lower half of that entire daily candle. Resistance here. Resistance here. We entered London at 2 a.m. Failed to touch it here. Break lower. Let's get in a little deeper. Slap on a little bit more insight. Midnight opening price. You want to have that on your chart when you're trading in London, or at least looking at it. All right. No editing here. Complete walkthrough. All right, so this is that 15-minute fair value gap, that SIBI, sell side imbalance, buy side inefficiency. We trade into it here. As soon as we tap that fair value gap, I'm looking for a reaction going lower, because remember, right above that inefficiency is our balanced price range on the 15-minute chart. And if we were to trade above this fair value gap, we're entering the upper half of this daily candle here, which is what we don't want. We want to stay in the lower half. All right, so London window is 2 a.m. to 5 a.m. New York time, of course. All right, so here's your London time window. So we're trading to that 15-minute fair value gap. How heavy is price? Well, for one, we can't even reach consequent encroachment, which is midpoint. Trade down, trade up, okay? Can't even take out this high. Trading above the midnight opening price. Still can't reach consequent encroachment of the 15-minute fair value gap. That's this price level here. Trade all the way down, clearing out the sell side. We'll look at setups in here. Trading back up. Just failed to reach that midnight opening price. If you're bearish and price fails to reach the midnight open, for one, we can't even take out the buy side. This high here could not even take out the buy side here. We failed to do three things. For one, we failed to trade to the 15-minute fair value gap. That's signs of underlying weakness in the NASDAQ. Second, we also failed to trade above the midnight opening price like we did here. That's underlying weakness in the NASDAQ. And third, we failed to take out the buy side above this high. So NASDAQ can't even do any of those things before giving up the ghost and breaking lower. All right, if you trade the 5-minute time frame, there's your setup, fair value gap. And you have a lot of inefficiencies here on the 15-minute time frame. Fair value gap, target anything in a discount. Okay, can't go wrong. 1-minute chart. All right. That orange level is your 15-minute fair value gap, trading to the bottom of it here. Breakaway gap, you want to see that stay open. Up close candle is your bearish order block. From the low all the way to the opening price. Okay, accumulates in here, sells off, like this candle opens, trades up right to consequent encroachment of the wick that makes the order block. Sells off aggressively, sell side, relative equal lows here. Sell side here, sell side, okay, and your last major sell side here. We tag all of that, retrace all the way up, and we talked about the failure to take out the high, failure to trade above midnight open, failure to even reach that 15-minute fair value gap. Trades down, comes back up, inefficiency. This fair value gap should act as a breakaway gap. You don't want to see that traded to. So this is beautiful. Consequent encroachment, look at the bodies. Awesome. Breaks lower, comes back up. Fair value gap here. Breaks lower, and now we're consolidating as we head into pre-market. So, quick summary, okay, quick rundown. Bias and narrative. Bias is where is it going, higher or lower. Narrative is why should it go there. Okay, so assuming I wanted to trade the London session, what is my bias? I want lower prices. I'm expecting price to go down. That's my bias. What is the narrative behind that idea? Daily chart, large down close candle. I want to see price stay heavy in the lower half. Okay, that's my narrative. Hourly chart. All right, I don't want to see this fair value gap traded to. Why? Because it's in the upper half of that daily candle. That's narrative. Bias is the same, still looking for lower prices. Narrative, this should not be traded to. 15-minute chart. Fair value gap here. We want to see that offer resistance. Why? Not interested in anything up here being traded to. We have a balanced price range here, right above the inefficiency. That's all narrative to support the idea of NASDAQ working lower. We talked about this here. Failure to get back above the midnight open, failure to trade above the buy side here, and also failure to reach the 15-minute inefficiency. All of that is narrative to support the idea that NASDAQ is weak and looking for sell side. All right, so narrative is all this detail here, bias, looking for sell side. And once you put all of that together, you can frame setups, optimal trade entry, short, breakaway gap, sell side, and all of these setups are formed with bias and narrative derived from the daily chart. So hopefully this one was insightful. Okay, I get a lot of questions about bias. For the private mentorship group, I know I already have the first 2 groups filled up, but this is kind of a sneak peek of what the lessons will be like. Obviously, there's going to be webinars. I'm giving out homework assignments. We're going to do one-on-one meetings and all of that good stuff. But as far as the lecture videos and videos that I'll be making next year in 2025 that I want you guys to study, this is kind of going to be the format. This is going to be the style, the kind of vibe. For those who are already signed up and secured their spot, this is how we're going to lecture, all right? And I'll take questions. We'll discuss, answer whatever confusion you have, and I'll assign homework. And we're rolling for 8 weeks. So hopefully this helped a little bit with bias and narrative, and you can use this information to help frame trade ideas on whatever time frame you choose. I'm so excited. Free live stream, public live stream, Monday morning, literally getting started in about 3 hours. I'm on no sleep, but I'm feeling good. I'll see all of y'all in the live stream on Monday. And full access members, we're back live trading Tuesday at 9:30. All right? Peace.